Hi, good afternoon. Salam alaikum. Actually, we are trying to see the vouching of the balance sheet items. Just like we have seen, there are four types of transactions, that is receipts, payments, sales and purchases. Again, the payments could be divided into the payment of revenue expenditure, payment of capital expenditure, receipts of revenue receipts and capital receipts. So when we are talking about the balance sheet as such, especially we are targeting or focusing on the capital natured items. So when we are talking about the balance sheet, then all the capital expenditures and capital receipts we are talking about, and verification and valuation of assets and liabilities. This topic, this chapter, this outcome is nothing much talking about the whenever you get any particular item of asset or liability in your hand, how would you vouch for that? What are the items which you are going to check for it? And accordingly, as an auditor, you have to keep yourself in an auditor's mindset, and then accordingly you can take a call which all items are there which you will take into consideration while vouching for any asset or liability item. And that is what is required. All of you know that the financial statements are made up of basically 4 to 5 statements which we have generally. That is income and expenditure statement, then statement of financial position, that is balance sheet, then cash flow or funds flow statement. It could be statement of changes in owner's equity, or it is called as statement of capital. Then notes forming to and part of the financial statements. So these are the different financial statements which an auditor has to come across, auditor has to take into consideration. And when specifically an item is being vouched, then what you are supposed to do? Basic criterion for vouching of receipts or payments, or maybe capital receipts and capital payments, or revenue receipts and revenue payments. The basic criterion remains one and the same, that you have to vouch the original document, you have to vouch the journal entry for the same. Then either you are doing it from the supporting document to the original journal entry, or you are doing it from the journal entry to the supporting document. The journey is, even though the journey flows or journey paths are different, the logic remains one and the same. What you are supposed to do is, you have to confirm yourself that minimum 2 to 3 criteria are met. Number 1, date, particulars and amount and all these things are there. Number 2, approvals, authorizations and signatures and everything is there. Number 3, the accounting treatment, accounting policies and everything is being followed properly. In case of inventory valuation, in case of calculation of depreciation, especially this care has to be taken, because if the basis is changed, it has a lot of impact on the profitability. At the end of the day, what is your objective through auditing? Why you want to verify these items of assets and liabilities? Basically, you want to establish a surety, an assurance you want to make to the investors or those who are making use of your reports, that whatever are the financial affairs of the company or state of affairs of the company they are all correct. They are depicting a true and fair picture of the financial position of the company, maybe for the particular year or maybe as on the particular date. In case if it is for the particular year, we call it as a financial performance, which is depicted by income and expenditure statement. And if it is a case of particular day's position, we call it as a financial position, which is nothing but balance sheet. So financial performance is measured for the full period. It generally consists of an year, whereas financial position is measured for the particular day, that basically depicting the balance sheet. And ultimately we are going to deal with the balance sheet items, that is assets and liabilities. This is our chapter number 5. You can see the annual accounts and balance sheet, what exactly is to be prepared, contents of the balance sheet, what are there. Then vertical balance sheet is being given to you. Generally balance sheets are of 2 types, horizontal and vertical, but here you come across the vertical balance sheet, in which first assets, non-current assets, that is current assets, followed by fixed assets, total of asset side. And as far as the liabilities is concerned, current liabilities followed by capital, followed by long-term liabilities. That is what generally you take care of. Now this Nasser bin Muhammad bin Nasser al-Hadarmi is the chairman, Arij Vegetable Oils and Derivatives SAOG, that company's balance sheet is being given to you. From this you can come to know many things are there. If you talk about the assets, there are 8,910,065 riyals Omani, non-current assets available, and the breakup of that same is also given. Property, plant and equipment, fixed assets are also there. Non-current assets, especially mainly fixed assets only. So intangible assets are also given. So different amounts are there. If you find the 2007 figures, they are supported by 2006 figures also. So on the right hand side column you will find out that there are 2 years figures which are being given. The basic purpose for which is nothing but to have a comparative analysis of those figures. So if you are talking about such kind of figures, it will help you to understand what were the figures last year and what are the figures this year. Perhaps as an auditor, it will be of much more interest to you if there is a drastic change, or there is a considerable amount of change in the figures of the previous year and this year. Then why? That question of why should come from you. If the asset balance has increased, why? Why? It means, have they purchased new assets? For example, if you come across, say for example, property, plant and equipment, your page number 39. If you come across property, plant and equipment, the property, plant and equipment for the last year were 9,707,173, whereas this year they have come to 8,910,065 riyals of money. Now if you apparently look at the figures have gone down. It means the balance of the asset has gone down. Now perhaps there can be many logical conclusions as far as these difference in the figures is concerned, because there is downward trend. The figures or the amount of the total non-current assets has gone down, but that could be because of many reasons. That could be because of many reasons. The main reason being, some assets might have been purchased, some assets might have been sold, some depreciation is charged. So why there is a difference between the asset, and that too on declining side, on decreasing side, that as an auditor we are supposed to find out. If it is normal, if it is natural, if it is logical, then there is nothing to worry. But if there is some absurd, there is some unusual or abnormal item which you find, you have to take into consideration that there has to be an investigation, and that investigation can be completed, or that auditing portion can be very well effectively complied with when you come across the vouching of assets and liabilities. So try to understand, these are all the assets which or liabilities which we are going to see why there is a difference, how that difference has come, and accordingly we are going to take the call. If you come across page number 40, same thing is there in case of equities and liabilities, and if 41 page number, you will come to know there are various income and expenditure statements. So basically balance sheet auditing is very important, because balance sheet auditing will give you the effect of the financial position of the company as on the particular date. And this is where the main crux, the main important point of the story lies, because financial performance is consisting of the income and expenditure statement, which is the state of affairs for the entire period, for the entire year. But balance sheet is on that particular date. So all revenue items, revenue incomes and revenue expenses, the existence of which comes to an end after the particular year, are considered in income and expenditure statement. But when it comes to balance sheet, they are all carried forward and long-term items. So you have to take into consideration these items.